Welcome back, everybody, to another Market Open. Here we go. It is March 22nd, 2023, and we are here for the Market Open. I just got done doing my first morning show. It was super fun. I just put the chapters on the YouTube video description, so you guys can skip through the sections if you'd like. And we did that live from 8 a.m. to 8:45, and I want to start 7:30 to 8:30. That's usually what we want to do. But maybe 8 a.m. is the best time. So we'll see where it goes from there. It's my morning show that is in addition to the morning live stream. I really like doing it. It was kind of fun just like getting there and being able to talk long form for an hour. And then we'll clip it up into clips for anyone who wants to see any of the clips. So thank you. We had about 230 people join. So thank you so much for being there. It means a lot. We are here back for the morning open. Grom plays. Thank you for being here. Ty Gorton, the louder the bell, the founder, the swell. Or the fonder, the swell, ancient Chinese proverb that I just made up. I love it. Joel, what's up? Philip, Carlsman, Vincent, Foolish, Hiker. It's a wonderful day in the neighborhood. Yes, it is. Good morning. $2 million SoFi FDIC announcement is out. Yes, and I think we'll start off with that news. I just did a clip on SoFi, but this news just broke. SoFi is nearing $6 now at 5.92, 5.96. So there is... We've got SoFi up very nicely in the pre-market. And the reason for this is because they just announced that all deposits within SoFi Bank are FDIC insured up to $2 million, which is even more than Robinhood. Robinhood had been FDIC insured up to 1.5 million. So obviously they're going back and forth. Robinhood had 4.15% interest rate. SoFi at 3.75. They bumped it up to 4%. And now SoFi is giving you $2 million of FDIC insured money. This is really important because anyone who is scared of putting their money in SoFi or Robinhood, etc., if you're FDIC insured up to $2 million, I don't have $2 million in SoFi. I don't have $2 million in Robinhood, but I do have a significant amount in the context of my life. And if those firms were to go under and I lose that money, it would suck. So the fact that that is FDIC insured should be very, very reassuring. Again, this is the FDIC's goal, right? This is the Fed's goal. Like, let's promise that you're insured so that most people in America that own $2 million but that want to put their money in a regional bank and don't want to put it in a big four bank, those banks don't have a bank run and those banks don't have any issues with being able to secure deposits because the FDIC has insured them. So we got the news for SoFi, and that's why SoFi is flying right now. All right, the big news of the day, the super big news of the day is going to be, what does the Fed do? Do we get to 25? Do we get to 50? Or do we get to a pause? I think we're going to get to 25. Now, the market is still rallying in the market. You've got SoFi at 5.93. Palantir down just a little bit at 8.42, but not too much. We've got NEO up 2% now at 9.49. Tesla doing phenomenally well, up at 199, inching back towards 200. Amazon down just a little bit in the pre-market. Bitcoin, 28,340. It was stuck at 28,100, so it's climbing up above 28,340. I don't know how many people hold Ethereum, but Ethereum also rallying with Bitcoin at 1,800. I remember the low on Ethereum was around 900 a couple months ago. Ethereum now rallying with Bitcoin, just like other stocks. NVIDIA up as well. They had their AI day yesterday. AMD down just a little. Intel just down just a little. Let's go to FRC. What's FRC doing? FRC is down 0.51%. So it ended yesterday up 30%. Now it's down 0.51%. I have not decided to go long on FRC yet, although it seems like more of an attractive option. But it's still scary because, anything could happen. And we have to kind of see where it goes from here and where customer confidence is. But SoFi is the big winner of the morning, just absolutely killing it today. SoFi being up 6.28% at 592. My puts on SoFi for April 21st at $5 strike price are very secure. One would even argue they are cash secured. I need a soundboard so I can do the drums on tis. I need that sound. That was I hope you guys, I hope you enjoyed it. That was my humor for the morning. That was my humor. Okay. So, meeting is at 2:30, but the 2 p.m. Eastern is the announcement. The meeting usually is at 2:30, but the announcement usually happens at 2 p.m. So that's when we will know if it's 25 or 50. I wish I could live stream it. I'm going to be at the Fed. I'm going to be at the dentist at 2 p.m. Actually 1:30. So I will not be able to live stream that. Although after we get the meeting, it is kind of boring watching Jerome just talk. It's really not that exciting to watch or anything. I'll be trying to tweet as much as I can, so make sure to follow me on Twitter at @AmidIsInvesting. But we're likely going to get 25, and that's going to be at 2 p.m. So we'll see where that happens. Did you see Intel's chief architect of GPUs leaving? I did not see that. I wouldn't doubt it, though. I mean, Intel's been struggling a little bit to kind of maintain their momentum. It makes sense that he's leaving. Intel is definitely falling behind in the context of now. NVIDIA is still, Intel's still a big company, but in the context of NVIDIA and what they're doing with GPUs, they are like. Okay, we should be back. Sorry about that, guys. The stream died just for like a minute. Wi-Fi should be back, though. GameStop. We got to talk about GameStop. We should be back now. Should be back. GameStop was up yesterday as well. Almost, 50% yesterday. So if you see in the pre-market, it is also up 52%. GameStop now being at $26.95. And that is because GameStop actually put a quarterly profit that no one expected GameStop to be able to do. So now that we got a GameStop quarterly profit, people are more excited for GameStop. Obviously, are you using Intel's GPU? Intel stopped the stream. Yeah, they heard about it. At least it froze in the green. Obviously, GameStop is not a stock I would argue you should gamble on. The RSI is about 44, now trading at $26. Look, GameStop had its run up. If we go back to the max chart, this was a historic moment when it was at 64 cents and then boom, went all the way to 120. This was pre-split or this is before the split. So this is post-split. When it happened, it was at like 350. It was absolutely insane. I remember thinking I should buy some GameStop, but I didn't buy GameStop. That was a smart decision, not buying it at $350, but it has fallen since then. And I think the GameStop, let's go to AMC, kind of meme mania has also ended as well. AMC now at 4.75, up 7.71%. That's kind of started to die down. It just hasn't been able to maintain the momentum. But if we do get into a bull market, we might see some of these stocks having more fun again and rallying just based off their communities being able to take them to another level. AI is also up 1.3%. It was up 7.9% yesterday, now at $23. Again, this is a stock that I'm just not that excited about being up, but when the market rallies, the market rallies. And again, SoFi now at 579, down just a little bit from 592. Enphase also is up 210. I have a video coming out today for why Enphase is now one of my newest stocks that I've purchased. I have 17 shares of this company. Excited about Enphase. Let's see if we can get it back down under 200 because when it runs, it runs. So let's see where it goes from there. And in about a minute, we have the market open. Bought the dip on Amit. I appreciate it. Bought Amit crashing, literally crashing pre-market with the live stream. I joined at a funny time. Amit staring at the screen. I thought he got another text like the last time. Yo, that text. All right, I can't say what that text was. The OGs know that day. You know that clip when I got the text. I can't say what it was, but it was. Let's just say it was not a good text. I'm literally looking at it and I'm like, it's not girlfriend broke up with me text, but it's close to girlfriend broke up with me text. And I'm looking at it like that clip is iconic, bro. I have to like pin that on my Twitter or something. That's the OGs know when I got that tweet, when I got that text. I was genuinely sad when I got that. Like I was really sad. And I was just like, but we were only 2 minutes into the market open. And I was like, well, if I don't ring the bell, the market won't open. So someone's got to open it. So I had to put all that to the side and keep going. But the situation with me and that girl that ended up texting is actually resolved now. She wasn't a girlfriend or anything, but it is resolved. And we got on FaceTime, we got talk, all that stuff. But the day I got that text, it was not a happy day. All right, here we go. February 22nd, 9:30 a.m. The market is now open. Wake your ass up. The stock market is open. Let's see where the market decides to go. C3 AI at 23.58, AMC 4.6, GameStop 26, up 49%. Let's see if it has any momentum to hold on. SoFi up 3.78% at 578. Ethereum 1807. Enphase Energy 210, up 1.25%. S&P down relatively flat. negative 0.02% at 398. Let's see if we can break over 400. That's the core kind of psychological barrier. Tesla, 199.60. Ginkgo Bioworks up 8.87% at 1.35. Palantir, 846, up 0.12%. Amazon at 100 flat. Bitcoin, 28,411. Bitcoin is starting to moon again. The only reason this is happening is because someone on Twitter is betting $1 million that Bitcoin gets to $1 million in 90 days. That's really the core catalyst for this. Otherwise, this wouldn't be happening, but it is a damn good catalyst because the bet got a lot of people's attention, and now Bitcoin is starting to edge up. NVIDIA at 263, Intel at 28, AMD at 95. So AMD relatively flat, NVIDIA up a little bit. Credit Suisse still 94 cents. We know what's going on with them. They are getting bought out. Google at 104. Google not bad. It was at 90 just 2 weeks ago, so now it's back up to 104. Wejo's entire run has collapsed. Wejo was up like 50%. Now it's back down to 55 cents. Well, it's up a little bit from 34 cents. So the entire thing is not collapsed. But again, that's why it's hard to buy these SPACs. It's a little bit too speculative to me. I'd rather just buy Palantir. Roku at 66 bucks. Coinbase, $83. Obviously going up with Bitcoin makes sense. Apple, look at that. Crossing over getting close to 160. Stuck at 150 last week, so it's crossing over. Lucid still stuck at 810. Alibaba stuck at 84. Spotify doing very well, up at 131, up 2.35%. RSI at 46. One could argue that Spotify is undervalued. Going into their balance sheets and their cash flow statements, it's hard to sort of make the argument that the income statements look the best, but nonetheless, if it's just pure macro driving up a bunch of stocks, then you could argue that it's undervalued. NASDAQ, 11,842. So we are 200 points away from 12,000 on the NASDAQ, down 17 as we open the market. We'll see where it goes from there. And Netflix at 304, down 0.38%. Relatively flat this morning as well. And I want to pull up Palantir. I have a new deal on Palantir we can talk about as well. Palantir at 848, up 0.36%. Adding SMCI to my watch list after you talked with Chris last night. Yeah, I am adding. Let's go to SMCI as well. Chris brought up a really interesting stock. Most people don't know about this. It's a chips play. Its market cap is 5.9 billion, and they're doing 6 billion in revenue. Chris has done a lot of research on this one, and this one it looks like if you wanted to get some exposure to semis and you didn't want to get stuck in AMD and Nvidia, which are objectively overvalued. Nonetheless, you're paying a good premium for those companies because they're phenomenal companies. SMCI is one to definitely take a look into. Their numbers look just phenomenal. And I believe it's growing it was last year grew at 50% year over year. Now it's not going to keep up 50% year over year growth, but to have a PE of 9 and trading at 40% or at growing at 40% year over year, trading at PE of 9. Now it's a PE of 10.65. But, look, that's exciting. I mean, you got stocks like Tesla that are trading at PEs of 55, growing 30 to 40% year over year. Enphase trading at a PE of 44, growing at 70% year over year. So when you get those high growth rates, the PEs start to get really ridiculous, but you're willing to pay that premium. For SMCI, it has a growth rate, but the PE is not ridiculous, which is one of the exciting things about Enphase. Anyone buying Fubo? Fubo is an interesting stock. It has a cult behind it. I don't think the fundamentals of it are the best. I do think there is some level of a narrative to it, but I'm not the biggest fan of Fubo. I wouldn't. There's just too many opportunities in the market to take a really speculative bet on Fubo. Did I say February 2nd? No, I said March 22nd. Did I say February? Oh, I'm sorry if I said February. It's definitely March 22nd. So again, we've got the Fed. They've got some very important decisions to make today, and we will see kind of what the Fed does. Let's take a look at this. The Fed shouldn't at all. So let's take the super ultra bull case for what the Fed should be doing.
Insight on how the Fed's action today could affect markets. Let's bring in Noah Blackstein, Senior Portfolio Manager at Dynamic Funds. 25, I don't know, it's not going to end the world. You think that's what we get, Noah, just so they can say, yeah, we're still watching, we're still paying attention to inflation, that we're not going to let that stay out of the bag, but we're aware of some of the risks to raising, so they go 25?
I think they will go 25. I think they'll unfortunately go 25 because I really don't think they should raise at all. I've heard this theme more recently on the balance between financial stability and price stability. And it's some sort of economic trade-off that in reality, there are long lags to what they have done with one of the most aggressive tightening cycles in history. there are also clearly credit problems. And most economists seem to not understand how credit works. And the multiplier effect, or as Bernanke called it, financial accelerator effect of problems in credit. And so they probably shouldn't do anything. It is not a trade-off between price stability and financial stability. Financial stability and credit really are what should matter most to them. And so, my concern is that they could make a very difficult situation a lot worse. People are one-offing Silicon Valley Bank, but on First Republic and on Signature Bank of New York, you're talking about top 10 commercial real estate loan portfolios in the United States. And even if you look today, some of the office REITs stock prices are 40% below the COVID lows. Now, while all commercial real estate isn't necessarily that.
So it's interesting because the argument he's making for why the Fed shouldn't raise rates at all is that stock prices are down 40% below some of their COVID lows. And that makes sense, right? COVID, we had a low, but that low lasted for like maybe 2 days. And then boop, we spiked, and we didn't stop spiking until 2021. And now those equities have fallen down massively. I mean, if you look at Amazon, they have doubled their revenues since COVID, since March 2020. And they are trading at the exact same price, post-split adjusted. I mean, like, that's why Amazon seems like an interesting opportunity. It was at $100 back when we had COVID, and it's still at $100, and they've doubled their revenues they went from like 125 to 250 billion. And so when you've got some of these companies going down, or when you got some of these prices being flat or down from the COVID lows, it makes sense from one perspective to think that the Fed should ease up. But that only takes into account the stock prices of some companies and not some of the macro issues like inflation. Now, if you go to some of these websites like Trueflation, which I found out about yesterday with Chris, I didn't even know Trueflation was a thing. Apparently, Trueflation is saying that we have inflation at 4.04%, which is really interesting. Trueflation apparently is a respected source. It's not just some random website. They take into account a lot of different data, and they had it right when the Fed was saying it was 9% in June. They said it was 11.7%. So they were overestimating when the Fed was theoretically, and the CPI is not the best indicator, right? But when the Fed was not saying what it actually was. And now they're giving CPI at 4% when the Fed is saying it's at 6%. If this is correct, which, maybe historically is correct, then inflation's coming down. And if inflation's coming down in this way, then 50 might be a little bit too much. 25 would actually probably be perfect. At least at this level, it shows that the Fed is at least still concerned. Now, being very decisive would be pausing, or 50. In the middle is where you get 25. I think the market may spike a little bit on 25. But after this 25, and based on the next CPI we get, where 6% might go down to 5.5%, we might get an actual pause. We're going to get to 4.75%, which is the highest rate we've had since July 27. And so I think the Fed's going to think really, they're going to think twice about what they ultimately have to do and where this goes, or where they want to go from here. Amazon's retail business loses money. Only AWS makes money. And the problem is, as I talked about yesterday, Amazon is cutting 9,000 jobs, many of them from AWS. So yeah, the retail business sucks. I agree. If you look at the margins on the retail business, and I don't think they've turned up the heat on the retail business, they can probably do a lot better of a job making sure the retail business is more profitable. I've tried to sell products on Amazon before, and let me tell you, they take a traffic fee, like traffic to the website fee. They take a logistics fee. They take a supply chain fee. They take a delivery fee. I mean, you sell something for $20, you're maybe going to get like $3 to $4 of profit on it because they take everything away. So even with taking all those fees, they have such a complex infrastructure of being able to get you a product within 2 days that they just still can't make a margin on anything. They also have Amazon Basics, where they buy a bunch of stuff from China. So if I'm trying to buy, a pen, they'll have a pen that they pay 50% less for, which means it's 50% less price for me as the consumer. So I'm always going to buy from Amazon Basics, which is their brand from China, their wholesale brand, versus from a third-party seller. So selling on Amazon is cutthroat competitive. Some people are able to do it very successfully, but the fees they take are monumental. And so if they can't make a profit even after taking all of those fees, that means the retail business honestly sucks, but it sucks people into their ecosystem. It's a loss leader for the rest of the business. AWS is not growing as fast as it was 2 years ago, which is why they had to cut jobs from there. And so that's why Amazon's in a precarious situation in terms of what they're going to be able to ultimately do. Trueflation said 16% with 10.4% reported in the UK. Yeah, and like that makes sense if they're taking into account more data versus what the UK government would be taking this out. I'll check that out. I need 50,000 pens. We're screwed in the UK. Still over 10% inflation. The good thing is, if the United States gets its inflation under control, because the United States and the UK are allies and there is some relationship with us in terms of how we engage with trade, I do think it has some effects, not a lot, but at least around the world. If the United States can get our dollar under control, we are the reserve currency for the world, it should theoretically help some parts of the world, especially member nations of the world. It doesn't mean that the UK doesn't have to take their own precautionary steps to get inflation down, just like every nation does. But the United States being good should at least make it easier for the rest of the world to be good. Now, we can't say that about Venezuela and Turkey and some of these other countries where the United States, we can't do anything about those countries, but at least hopefully some of the other countries, the United States getting better helps other people. Canada decided to pause rates as well. And so Canada decided, that they were going to be stuck at, I think, 4.5. And so they're taking it a little bit more cautiously. And the United States, is deciding that today we're going to decide what we want to do, but we're likely going up to another 25 basis points and see where it goes from there. I'm looking at a lot of different things on CNBC, and almost everyone is saying we should hit the pause button. I don't know if it's worth kind of hitting the pause button right now and seeing where it goes. Let's take a look at let's take a look at this. We'll take a look at one of the more generic reasons for why we expect a 25 basis points. And then after this, we'll talk about the new Palantir deal as well.
Mentioned it is decision day for the Fed, and expectations are for a 1/4 point interest rate hike, at least by most. Steve Leisman joins us right now with more on this. And Steve, this may be the meeting we're going into where we have the least ability to really know what's going to happen. Maybe guesses kind of all over the map.
Yeah, Becky, this is a really difficult choice for the Fed, maybe the most difficult choice it's had in years. Gearing up to do what we think is to hike and provide guidance, but maybe different guidance about future moves. And all this comes amid turmoil in the banking industry that I think importantly for the moment looks to have settled down. Take a look here. The market was pricing in no change for several days. The futures market is back to predicting a firm 84% probability of that 1/4 point hike. Markets seem to take their cue from the resolution of several troubled banks, the creation of several government backstops, and the steadying of bank stops, although of course they're at lower levels here. Okay, now watch what happens here. The market expects the Fed will be almost done when it hits that 4.75 to 5% range today. And then there's debate about whether it does one more hike in May. And then pretty good agreement, the Fed fairly quickly reverses course and cuts at least twice by year end. Opinions are strong on both sides for what the Fed ought to do today. You got those saying the Fed should keep confronting high inflation, while others insist that raising rates just worsens the bank's problems. And raising rates would also ignore the decline in inflation expectations that's resulted from these failures. Forecasters predict.
That's true. Raising rates would decline the true inflation, saying it's 4%. This is why Jeremy Siegel is saying we don't need it. But again, the Fed, they said we're going to raise rates. And then the banks collapsed. And then everything they said basically has gone to shit because none of that matters when the banks collapse. So I think now they're going to do this 25 just because they want to keep their word and they want to seem as if they know what they're doing. But in the end, the most decisive thing is either 50 or pause. And because the Fed is not decisive, we're going to get 25. Now, this guy, I just want to say something real quick before I move on. This guy right here that you're looking at, he gets paid $6.8 million a year to do what he does on CNBC. I don't think many people know that. I just wanted to put that out there. I actually researched one day how much the CNBC anchors make. He makes $6.8 million a year. So the guy is well paid. He's inflation's probably not affecting him that much, but he makes $6 million a year. Okay. GameStop swings. Let's talk about that. Let's take a look at where GameStop is, and then we'll get into Palantir because they got a new contract today. GameStop up 32% now at $23. Yeah, we'll see where it goes. I'm not going to gamble on this one. We'll see how it plays out, but GameStop's a little bit of a tricky one to always work with. All right, Palantir 854. They got a new $18.5 million contract today. Now, it's more of an adjustment of a contract more than it is an actual new contract. They got a $54 million contract back in May 2022 with the Air Force contract for Project Brown Heron data as a service, essentially providing another application for the Air Force to be able to interpret their data in a more meaningful way. And they got a $18.5 million modification today. So the total contract's about $195 million. Palantir got $54 million back in May 2022, and today they get an $18.5 million modification. I think that means you're getting an additional $18.5 million because if the total is $195 and you got $54, then that's getting you closer to that $195. But I'm not sure exactly what the $18.5 million modification means. It does seem like it is a additional asset to the entire contract that they're going to be able to get. It's a big deal, obviously, getting that contract. It's not going to move the stock price. 18 million is nothing that's going to move the balance sheet for Palantir. But again, it just does show that the government's use cases of AI and the military applications of AI and data as a service, that is only growing and growing and growing. In 2026 or in 2023, we spent $800 billion on the government. Bank of America suggests that by 2026, we'll be spending $1 trillion on defense from the US government. That money's got to go somewhere. And with all the rising geopolitical tensions we have with Russia and Xi Jinping and Putin meeting up and deciding to have little tea parties, if that's the case, that money's got to go somewhere. And I think that money would likely go to Palantir over some of the other defense contractors. For Amit, Zoom needs to have a new feature, 0.5 speed for speech. I talk fast, man. I gotta, it's kind of just like it's just the way I am for some reason. I just talk quickly. But Steve looks like he just ate a baby. People were asking about Gabe and his NVIDIA puts. He is doubling down on his NVIDIA puts. He has not backed away from the puts. So Gabe, from what I know, because I'm friends with him on Twitter, he is adding more to his NVIDIA puts. He is still incredibly bearish on this market. So you do have bears that are out there. We got a little bit more red. Look at that red. Enphase is down, S&P down, NEO's down, Enovix is down, Tesla's down, DNA is down, Amazon's down, Triple QQ is down. So we've got a little bit of red in the sea of green. We've got a little bit more red. So it's turning more red, but the red is not that intense. Markets may be getting ready to see what the Fed says. The reason the Fed today is going to be so interesting is because Jerome's comments, he hasn't really publicly talked about the bank collapse in relationship to inflation, the bank collapse potentially being a deflationary effect, but then we printed $300 billion to be able to secure the banks from an FDIC perspective. So there's a lot of stuff he has to mention in terms of what's going on with the Fed and the banking collapse and inflation. And I think the market's going to be really interested to react to everything he says, not just the 25 basis points, but kind of what's going on in the macro, along with, all the crazy stuff that has happened over the past 2 weeks in America with our banking crisis. NVIDIA rallying though. Yeah, NVIDIA still rallying. NVIDIA's rallying. Thank you for 300 people being here. It means a lot to me. Thank you all for being here. Yeah, and I know a lot of people in the chat also have puts on NVIDIA. I was even thinking of getting puts on NVIDIA, but then that's the problem with getting puts on some of these companies. You like, they just decide to run. And when they decide to run, it's really hard to see what's happening. Let's take an update on big banks potentially taking more market share from regional banks. This is something that the Fed is trying to avoid, but let's see kind of how that's playing out right now.
To talk more about markets, Stephanie Link, who is chief investment strategist at Hightower, also a CNBC contributor. And Stephanie, we were just talking about these headlines coming from PacWest Bancorp. They did secure $1.4 billion in fully funded cash proceeds from Atlas SP Partners. This is a senior asset-backed financing facility. So I guess this would be first in line. It does have some assets backing it up. Trying to figure out what this means. If you look through the numbers on this, they say they explored the idea of raising capital, decided that wasn't the best way to go about doing it. Also saying that, look, they do have over $11.4 billion in available cash as of March 20th. And as of March 20th, the FDIC insured deposits exceeded 65% of total deposits. What do you think as an investor kind of hearing all of that?
Yeah, it's a lot to digest. First and foremost, I always am a little wary when companies, especially banks, tell you how strong they are, and excuse me, and they kind of go through all of these things. But these are unusual times, and it's good to say for them to tell us what they're doing and to be more transparent. I kind of think it's fascinating that they borrowed $10.5 billion from the discount window, among other federal programs. But I don't think that they could have done a deal, Becky. I mean, the dilution would be unbelievable, right? So, and I think that would spiral things a bit out of control. So, I'm a little wary. We're all watching these regional banks, First Republic as well. But I think that this makes the case, in my opinion, that the largest banks in the country are just so much better equipped for this kind of environment, right? Given the massive excess capital that they have. So I think they're going to continue, and I think the big banks are going to continue to gain market share as a result. And I think they already are. You're already hearing that their deposits are going their way. So there's a lot of uneasiness.
Would you put your money there? I guess my question is, because I think the secondary question is not only how you weather difficult times like this, but
it's going to be interesting to see what the big banks do in relationship to these smaller banks. Again, this is why the SoFi news was so important today. The FDIC increase of $2 million. It's like, look, at the end of the day, if the FDIC is insuring deposits on these new banks up to these kind of ridiculous amounts, $1 million, I mean, it used to be 250,000. That's a close to an 8x increase. Now you're at 2 million. People are going to feel like, I know I felt a lot more safer with my money in Robinhood, because a lot of my money's in Robinhood. When they announced that they're going to FDIC insure it up to 1.5 million. I'm like, okay, so like if Robinhood fails somehow, which I don't think it's going to happen to Robinhood or SoFi. By the way, let's check on Robinhood stock. Then I'm secure, right? My money is secure. And it just, I did struggle though after Silicon Valley Bank collapse. I was like, why wouldn't this happen to like Robinhood or SoFi or something? Like, why wouldn't it even have a potential of happening? And then when I got FDIC insured to 1.5 million, I'm like, well, I'm good. I don't have to worry about that. And that led me to not take my money out of Robinhood and then put it into JP Morgan Chase or anything like that. You know, I was able to keep my money where it is. And so that news for SoFi is incredibly important, because if that's not the case, these smaller banks, let's go to FRC as well, Robinhood at 925, they're just going to have more money that leaves their bank, and it's going to be going to other banks. FRC down 2.7%. This is one of the least volatile days for FRC, being stuck at around 15.20, 15.22. And so FRC holding on pretty strong, not being as volatile as it was over the past couple of days. I'm big on Tesla, SpaceX, Musk, but that little Rocket Lab company is fun to watch. Lots of positives. And, you know, Rocket Labs, I've been saying for the longest, I need to do a deep dive on this. I'm just so busy, and I've been trying to do a deep dive. Me and Matt need to do a podcast on this. He's one of the bulls that I know on Rocket Labs. I don't know. $1.86 billion market cap, $3.89. I just don't know enough about them, or personally I'm excited enough to want to buy Rocket Labs in comparison to some of the other companies that exist out there. Because, you know, $1,000 into Rocket Lab is not $1,000 into SoFi or Palantir or Enphase. And so, I don't know, to start a new position, I would have to really do some due diligence. But I know a lot of people have been excited about it. A lot of people have been excited about their potential, what they're able to do. RSI is at 48. So on the technicals, it's not, it's getting closer to a little bit more overvalued than not. But it deserves a deep dive. Definitely deserves going into a little bit. Enphase is down, thank goodness, at 206. We needed it to come back down to 200, so I can pick up a little bit more shares. So we see that coming down. Bitcoin staying flat around 28,400, and GameStop again up at 36%, now at $24. GameStop doing well. All right, let's take a look a little bit actually at why GameStop is going up the way that it is, and it's because it posted a quarterly profit. So let's take a look at what that quarterly profit means and why they were ultimately able to secure that. It's up 30% on a profit, which is definitely a lot for something being a profit.
Look at GameStop after hours surging on earnings. Steve Kovac has the numbers. Steve?
Yeah, John, it's up 20% right now. It just hit up 20% after turning a surprise profit for last quarter. Now, we don't have comparisons to analyst estimates, doesn't have enough coverage, but let me give you the results here. Net sales coming in at $2.23 billion, EPS 16 cents a share adjusted, and that translates to a net income or profit of $48 million. We haven't seen that in a while from GameStop, but investors loving it, up 24% now, John.
Wow. Steve, I don't know how much looking into the degree to which this stock is shorted you have done lately, but is this kind of move expected? It's reminiscent of the meme stock moves.
Yeah, it is. It's unexpected that they turned a profit, but look, and they're crediting a lot of things: cost cuts, layoffs, other efficiencies, like we've been hearing from so many companies over the last several months. And in addition to that, their collectibles business, so moving beyond just straight up video game sales, as a lot of those have shifted online, they're really leaning into that collectibles business. The other thing they're working on is this Web3 NFT store that they launched last year, but that really hasn't gone anywhere. So it's really about the...
Yeah, the NFT thing has not gone anywhere. It's probably not going to be going anywhere. So, I mean, again, GameStop posing a profit is interesting, but you've got to think to yourself, even if you're thinking of trading the stock, what is the growth potential with GameStop? What is it going to do? The NFT marketplace was introduced when the NFT, bull mania was going on. NFTs are dead. And that doesn't mean they're not going to come back, but they're definitely not going to be at the point where pictures of rocks are selling for $5 million. Like, that's just not going to happen. OpenSea trading volume is down 92%. The company was valued at $13.3 billion in a Series C funding in April of 2021. That's likely not the case to be at $13.3 billion. Like people just don't trade them anymore. So if NFTs and like Super Mario Brothers NFTs or the things that GameStop wants to market is like the future of the company, I just don't think that's the case. Should they sell more games? The problem is people just download their games from Xbox Marketplace or PlayStation Marketplace. People don't go to GameStop to buy it, right? So they've got all this physical real estate that's really not being utilized in a meaningful way. And I think they would have to do a massive pivot. And I think there are some pivots that don't revolve around NFTs, something more in the cloud computing space when it comes to gaming that I think they could pull off. You need some really good execution, but you also need a really good idea. I need to tell you about Rocket Lab and trying to get in touch on Twitter. DM me right now on Twitter. And I'll check it right now. Let me know about Rocket Lab, and we'll go from there. DM me about Rocket Lab. That would be easy. Or you could also email me, amit@dailypalantir.com. That also helps as well. Amit, where are you with Palantir stock? So I have 3,000 shares of Palantir. Average is at 15. Trying to get the average down to like 12. I think we're going to be relatively flat for the next couple months, foreseeable future. We need a massive catalyst to get Palantir above $10 and to keep it there. And I think the catalyst could just be the macro, to be honest. But it's also probably going to be another couple of quarters of GAAP profitability. We get there, then Palantir is likely going to be able to do well to get there. In Singapore, physical game stores are left with a few. Many have closed. Yeah, I would imagine. I don't know what the Fed is going to do, but I can tell you what NVIDIA is going to do. Gaming is leading the charge for zero ownership, sadly. Member-based games libraries. Yeah, this idea that you pay a subscription and now you have access to all these games. And, I remember when I have some old games in a drawer over there. I used to own like WWE and Grand Theft Auto and stuff like that. Somehow my dad let me play Grand Theft Auto. I don't think he knew what I was doing when he bought me Grand Theft Auto. But I was playing it at 11 years old, and I probably shouldn't have. But I had the physical game. I didn't have a subscription to anything. And that's kind of where I went from there. I think the NHS deal would be a catalyst. Yes, I'm coming out with a clip on that today. I'll be talking about the NHS deal, so watch out for that clip. I'll be discussing why the NHS deal. And Palantir put out a new video yesterday about reducing backlogs in the context of cancer treatment. I did a reaction to that, so that will be in the video today as well, and you'll be able to see that as well. Okay, that's it for me, everybody. Thank you all for being here. We did the market open today, and we did the first morning cowbell. That is going to be a daily show that happens every day, trying to also do it on Saturdays and Sundays, being a little ambitious here, seeing if I can get it on Saturdays and Sundays. But I'm excited because it wakes me up in the morning. It's super fun to have a show to be able to do. 230 of you guys showed up. It means the world to me. It was super, super fun. And then right after, we have the morning open. So you can aim for that being around 7:30 to 8:30, and then we'll have the morning open at 9:20 to 10. And then we've got late night stock talks with Chris every night, 9 to 10, except on Wednesdays. Today it'll be 8 to 9. And then we have the daily cowbell live on my channel every night from 10 to about 10:45-ish. So we've got 4 shows every day. The content is coming, plus clips in between the day. And we're getting the YouTube Shorts game up, probably about 7 to 8 shorts every single day. So we've got a lot of content coming every single day. And we're going to see if we can 10x the channel this year. I appreciate you all being here. Appreciate the community. It means the world to me. Thank you all for being here. Follow along for Twitter. I'll be live tweeting the Fed's event today. Unfortunately, I won't be able to live stream it. And that's pretty much it. All right. Thank you for being here. I will see you later today. Good night, everybody.